Hey everyone, I hope you're all doing well out there. My name's Dan Westfall. I'm a certified financial planner. I run Client Focus Financial. The reason that I put these market reviews together each month is to give my clients the straightforward information about what's going on in the stock market, the economy, and then ultimately how that affects their money. So this past month, we've had a little bit of market volatility, government shutdown continuing. Still at a spot for the year where we're up over 14% for the year on the S&P 500. You can see in this chart here kind of where we're at with the returns for the year and some of the fluctuations along the way. Had a little bit more of a drop off here at the beginning part of November. I'm shooting this here November the 6th, just give you a reference point. So, markets have done overall really well, even with, some of the, things going on with the government shutdown right now, which is a good sign that we're still kind of staying on trend and things are moving higher. Earnings reports have come out and overall have justified where prices are at, even though we're definitely on a little bit more of the higher side of things right now. We're definitely not undervalued. It's still a good sign that markets are responding the way that they are. So a few of the charts, if you're newer to watching these videos, I use a lot of charts to go over what's going on and just to depict things, because I feel that charts are really the best way for somebody to understand investments, markets, what I'm really talking about and how that affects their money, because I'm not selling a house here that I could just walk you through and show you where the closets are and how nice the bathroom and the kitchen is. We're looking at market charts and talking through just different dynamics of really intangible things. So I use a lot of charts because I think that's just really the best way to visualize that and soak in the information. So one of the charts I have here to look at is the 10-year chart of the S&P 500. So we were just looking at the year-to-date chart there before. This chart is showing the 10-year returns of the S&P 500 going back to the end of 2015 through today. So I brought this up because a lot of people are, not a huge amount of people, but I've heard it enough to where when I hear it from multiple people in different ways, whether it be current clients or prospective clients or just people that I'm having conversations with in the investment world, where they're thinking that markets are overvalued and that we're due for a major correction. I kind of try to take a step backwards to look at where are we at from a 30,000 foot view? And while on a short-term basis, we might be at a spot where we're a little bit on the overvalued side, we're not really dramatically overvalued on a longer-term basis. If we look at least at what the charts have been doing over the last 10 years. So I'm going to draw, I'll show you on this next chart, it'll be the same one of the 10-year. There's a trend line that you can see pretty clearly that I'm going to draw in here that shows kind of where we're at and the trend overall of the markets moving higher. And while it's gone above this and below this over time, it's generally, we're right on trend right now with where the overall longer term trajectory of the market is at. So not to say that we're not going to get some sort of drop off at some point here over the next 6 months, year. Very likelihood we will, because it's very unlikely that we don't get some sort of fluctuation in the market for one news event or another. And we're kind of prime right now for some news event to come out or something to happen that causes a market drop off in a shorter term time frame. But one of the things that I'm very optimistic about is that there's just a lot of buyers out there that are looking to get in the markets, and as interest rates go down, people that have money sitting in cash, which there's a lot of people that have a lot of money sitting in cash, whether that be money markets or CDs or short-term treasuries, they're going to be making less and less on that money, and they're going to be more and more likely to want to get that money if markets do go down for some reason or another. They're going to be more likely to want to get that money invested in stocks because they're not making much on the cash sitting there. So I wanted to bring this chart up, though, just because I been hearing it from a number of people that we're at some unsustainable level, or that we're just very overvalued right now, and that we're due for some massive correction. And just kind of, if you take a step back and look at the chart, we're really not at a crazy level of market heights where from a trend standpoint. So things are going really well in that direction, and Trends don't just end for no reason. So, the likelihood is we'll keep moving higher. So a couple kind of like a little pivot here of some charts that I wanted to bring up because I thought they'd be interesting to talk a little bit more about because, a lot of people have talked to me about buying houses or selling houses, whatever the case may be. And I just, the real estate market right now is definitely in a weird spot with not people that would like to buy but not at these prices, or the cost that it's going to take to buy a home, or and on the other end the sellers are looking for higher prices than what buyers are willing to pay for it. So there's kind of like a stuck market right now, and this is something I've heard kind of across the board, whether it be in Florida or different areas throughout the country, up in Pennsylvania as well. One of the charts I came across I thought was just an interesting chart to kind of look at is the number of completed new homes that are built but not sold. So it's at one of the higher levels going back through 2009, and it's at a spot where it's just basically a lot of home builders have built all these homes with an expectation in the beginning part of this year that there would be a lot more buyers coming into the market in April, and there just weren't. So there's just a lot out there, which a good sign for somebody that may be looking to buy a home is, especially a new home, is that these builders are going to be a lot more willing to negotiate price or give better terms. Or I even saw a Wall Street Journal article where they were talking about home builders selling homes for 4% interest rates. So where they're just trying to get rid of the house essentially and get it off their books, and they're willing to give these people these discounted rates through loans and just different financing options. So I thought that was kind of an interesting thing to see within the markets. But that chart especially stuck out to me of some of the charts that I came across this month, because I felt that it was a little bit of a more extreme one. So tying into that, this next chart that I have is going through different housing metrics. You have the mortgage rates at the very top end of the chart there. 30-year mortgage at a little over 6%, 15-year mortgage at 5.4 currently. You have the median existing home prices. These are obviously existing homes versus what we were just looking at was new home inventory. And then at the very bottom end, you have median sale price for new homes being sold. So kind of looking at the inventory we were just looking at there. These are the prices that some of those new homes are being sold for. So I thought the top part here, being that we're below or right at that 6% level, you would start to see a little bit more of a pickup maybe in home prices and sales overall, but looks kind of continually where the housing market just in a stuck period. So how that affects portfolios that I'm helping you manage, there's a home construction fund that have about 3-4% in the sector rotation strategy. That's a part of the portfolio that's the worst part of the sector rotation strategy. It's an area that I felt that if interest rates were to drop down enough, would do really well. It was up another 20% actually from where it's at currently just a couple months ago. It's come down a lot since then because even with interest rates coming down, there just hasn't been new home buyers coming into the market. So at some point I'd have to imagine that will change, and we're just going through some kind of extreme swings with that. So it's part of the portfolio that I'm not looking to make any dramatic changes with. One of the things that I've looked at adding to the portfolio for sector rotation is actually incorporating Bitcoin into the sector rotation in a very small way. But for those clients out there that I have that are more conservative or in more of the options-based strategies, part of your portfolio is in Bitcoin, because I use that as actually a way to diversify away from the stock market a little bit. In the sector rotation, if you're somebody that I work with that's very aggressive and you have an IRA with me, we use sector rotation for that, but I don't have Bitcoin in that part of the portfolio. So That's something that I'm looking at adding as Bitcoin's drop closer to 100 per coin after being up closer to 125 per coin here, more recently and in the last few months. So waiting to kind of see where price action moves from here before adding that, but that's something that I'll add as maybe just a few percentage points to the whole portfolio, nothing dramatic, but something that has really helped out portfolios as a whole as Bitcoin prices have moved higher over the last handful of years here. So kind of keep an eye out for that. I'll pull up, if I didn't already, I'll show you the chart of Bitcoin here, just so that way you can get a good look at that. So those are just some of the changes that I'm looking at making, and things that are happening within the portfolio right now. A little bit about the housing market as well. So one of the last charts, the last chart that I have here actually, that is just more of a fun chart, honestly, that I saw that I thought would be kind of fun to just pull up and show you guys, is the chart of NVIDIA versus other countries out there, and the market cap of NVIDIA. So basically what NVIDIA is worth. NVIDIA is a chip maker. Its chips are responsible for a lot of AI technology that is going into a lot of different companies out there. So they make probably one of the best chips for AI. So that's one of the reasons that we see that as NVIDIA driving prices driving up in NVIDIA so dramatically. But just looking at over the last 25 years, the price of NVIDIA versus the GDP for other countries, and seeing the fluctuation of all of them. NVIDIA is now larger than Germany, the entire economy of Germany, Japan, India, France, Italy, and Canada. So even while India is definitely a very expanding economy, and it's gone up pretty dramatically over the last 25 years, still doesn't kind of compare to NVIDIA's price and how much that's grown. So and that's led to a lot of people thinking like, oh, we're in this AI bubble. But there's all these companies that are buying that, and really NVIDIA isn't dramatically overvalued, despite how much they've gone up over the last 5 years especially. So I thought that those are just some good charts I want to bring to you guys. So if you're up in Pennsylvania, I'm going to be up there doing in-person reviews for those up there that I normally get together doing in-person reviews with. I'll be up in December. If we're doing a Zoom meeting here later this month, I look forward to getting together with you, connecting kind of virtually that way. If you have any questions, or you'd like to connect with me and review your account specifically, or if you're somebody that's not my client and you want to talk to me about your investment portfolio and improving on that, be happy to have a conversation with you about that. We can schedule some time, either just have a phone conversation, or if you're a client and you want to do a Zoom conversation, we can schedule time for that. Just reach out to me, and we'll coordinate time for that. I appreciate you all taking the time to check me out. Until next time.